On Monday night, President Dr. Irfaan Ali instructed that freight charges be reduced to pre-pandemic levels to cushion the effect of rising international shipping costs, which have resulted in increased prices for various commodities on the local market. In an interview with the newsroom on Tuesday, Senior Minister within the Office of the President with responsibility for finance, Dr. Ashni Singh, explained that this move will essentially result in less taxes being taken from importers and as such is expected to result in a lower cost of goods.
So what the initiative that the President announced yesterday aims to do is it aims to make an adjustment in the value of the items for the purposes of calculating the taxation, and the adjustment is going to be made on the freight cost, so that whereas if we use the pure or unadjusted, if we use the unadjusted CIF value, then that unadjusted CIF value reflects the current high level of freight or the high cost of freight. What we're going to do is we're going to adjust the CIF value to reflect the pre-COVID cost of freight, and then apply the tax rate to that. So that potentially will reduce at least the taxes that will be charged on items that are being imported into Guyana, and then in turn will translate into reduced cost of the item getting to the wholesaler, and then getting to the retailer, and then getting to the final consumer. We estimate that this is going to cost approximately $4.8 billion over a 6-month period. As you know, the initiative takes effect from August 2021, and we've announced that it will run up to, I think, January of 2022, so just about 6 months.
Meanwhile, this reduction in taxes that the government will be accumulating from the importers, in addition to the suite of tax reliefs already granted, means that the government will accumulate lower revenues. Dr. Singh, however, noted that the reduction in government revenue at this point is not expected to reduce government's spending.
I would say at this stage that we're not at the point where we expect that this will necessarily or automatically translate into reduced spending. I think we're still looking at how the budget is being executed on the expenditure side. Some things are moving as we had anticipated, as quickly as we had anticipated. Some are perhaps, for a variety of reasons, there may be one or two things that perhaps might not have moved as quickly as we had anticipated. But we're certainly pushing, at this stage, we are still pushing to get the entire budget executed on the expenditure side. So, I would stop short of saying that this necessarily means that, this reduction in revenue necessarily means that that there's going to be a cutback in government expenditure. What I will say is that as a policy maker, we constantly have to strike an appropriate balance between the revenues that we raise, the expenditure that we incur, and the manner in which we finance that expenditure. And in some cases that means borrowing. And if that is what is necessary to deliver temporary or short-term relief to people, and if as a policymaker we judge that a temporary measure is required to deliver relief to people, and that means a temporary intervention to raise a little bit more financing by incurring a little bit more borrowing, then we will do that. But we do it in the context of a carefully considered judgment on what is necessary for the purposes of maintaining and stimulating economic activity, delivering relief to households, while at the same time preserving a sustainable fiscal position for the government.
The senior minister also said that government will be monitoring to see whether businesses will lower the prices of goods for consumers. Reporting for the newsroom, I am Vishani Raghabir.